On Point with Craig's Investment Partners.
The information provided here is general in nature and it's not financial advice. It doesn't take into account your financial situation, objectives, goals, or risk tolerance. All investments are subject to risk and none are guaranteed. So before you make any decisions, we recommend you contact an investment advisor. For more information about our services or to view the Craig's Investment Partners Financial Advice Provider Disclosure Statement, please visit our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. The local reporting season is heating up, and we're all hopeful that it will suggest that the long-awaited economic recovery is in sight. It's been a very challenging 3 years for many businesses, big and small, across New Zealand. The economy contracted for 8 consecutive quarters on a per capita basis until late last year, and since then, it's been a very mixed and mediocre recovery. Unemployment has been ticking higher, net migration is slumped to well below average, and the high cost of living is still weighing on consumers. A turning point could be approaching, despite those disappointing unemployment figures we saw last week. Remember that the labour market tends to be a lagging indicator, and it's very unreliable as a gauge of what's ahead. The labour market is often strong heading into a recession, with unemployment only rising once the downturn has become entrenched and continuing to increase even after the recession ends. There's a similar lag coming out of a downturn, like we have been recently. When the recovery first takes hold, businesses first try and get more out of their existing workforce. They're quite cautious about taking on permanent staff until they see more evidence that things are getting better. House prices have also gone sideways for 2 years, while residential construction activity expectations collapsed to the lowest level in a year in last month's ANZ Business Outlook. The economic recovery we were expecting in 2025 just hasn't materialised, but an improving backdrop is still on the horizon. The official cash rate, the OCR, has fallen from 5.5% to 3.25%. Financial markets are picking another cut next week and at least one more cut after that. Mortgage rates have followed the OCR down, but there's more support to come as households continue to roll off the higher rates of the past. Homeowners are still paying 5.7% in aggregate on their fixed mortgages, while the prevailing 1 and 2 year rates now begin with a 4. Agriculture is another bright spot, with last season's Fonterra payout the highest in history, and this season tracking pretty well too. A stronger New Zealand dollar will be proving a minor headwind for back-to-back $10 payouts, but exporters can't complain too much with the currency under US 60 cents. After a very difficult reporting season in February, we'll hopefully see some more stability during these last few weeks of August. We've got through the confession season largely unscathed, aside from a handful of announcements from those in the more economically sensitive sectors like retail and construction. The confession season is the period just before the reporting season, and that's when companies have seen their preliminary numbers and they've realised they won't meet market expectations. They're required to disclose that to the market if they'll be reasonably outside the margin of error. August is also the first opportunity for many management teams to offer some initial guidance for the 2026 financial year. Hopefully, some will have a bit better visibility than 6 months ago or 12 months ago, and they can give us a clearer picture of where things are headed. There'll be lots to watch over the next few weeks, with many of our largest corporates under the microscope, and some of the heavyweights set to announce results in the coming days. Contact Energy, A2 Milk, Spark and Auckland Airport are all up next week, as are Freightways and Fletcher Building. Those last two are always interesting, as they really ride the ups and downs of the economy compared to some others. Plenty more will follow over the balance of August, and hopefully the mood of management will have improved. There's an election next year, and with the last four being held in September or October, it's not far away. We're in August now, so you're talking 13 months, maybe 14 months until that next election. A stagnant economy, sliding house prices, persistent cost of living increases, and rising unemployment, those are the kinds of things that can get governments voted out. The next few weeks will reveal whether our listed corporate sector is ready to embrace recovery or if we'll be left waiting cautiously for another 6 months or more. For under pressure management teams, frustrated investors, and nervous politicians alike, the stakes are rising after an extended period of underperformance. Thanks for listening, team. We'll talk again soon.
For more insights, visit craigsip.com.